Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we have Wayne Heili, who's the Managing Director and CEO of Peninsula Energy. Welcome to the show, Wayne.
Thank you, Karem.
Let's start by you giving us a brief overview on your background. And I want to talk about why uranium has been the main focus of your career to date. So give us a sense of how the uranium market has developed and perhaps changed throughout your career.
Sure. Thank you. I came into the uranium market in the late 1980s. I've been a part of the U.S. domestic production industry for over 30 years. My background is coming from a metallurgical engineering and process engineering side. And I spent a lot of my early years in the profession, in the uranium industry, working in operations and managing operations. I've, of course, developed over the years and added responsibilities. And later in my career, I've been involved in the design and construction of new mining facilities in the U.S. My background really has been on the chemistry, the production side, and then later on becoming involved in the uranium markets and how the fuel goes to the customer.
Very good. So, Wayne, you have over 30 years experience within the uranium sector. So let's talk about the previous bull markets in uranium and perhaps the parallels you see for the potential for today's bull market. Can you compare the fundamentals and the supply disruption we saw last time to what is currently unfolding today? What is your sense of where we are today?
Sure. Well, when I entered the market in the late 80s, uranium prices were around $16 a pound, and they were significantly suppressed from the events of 3 Mile Island, which happened in 1979, and then Chernobyl, which happened in 1986, just a few years before I came into the uranium market. Uranium production continued on the heels of 3 Mile Island and Chernobyl. And, the industry continued to churn out significant quantities of uranium. And that led to a really prolonged price bear market. That bear market really didn't correct until 2004, which was the beginning of that time frame we now fondly call the uranium renaissance. The Renaissance period, 2004 to 2009, in my view, was the one significant bull market that I experienced in my 30-year career. And what led up to that was the introduction of traders and institutional investors into the uranium market. It was easy to see in those days that production wasn't keeping up with demand and that uranium inventories would be tight into the future. But before the early 2000s, there really wasn't an involvement in trading companies in the uranium market. Most of the uranium marketing was done directly from the producer to the consumer. And in the early 2000s, trading houses came in, started buying up inventory, started driving prices higher. And that is a parallel to today. Today, we see a higher level of investor interest in uranium, driven again by the clear recognition that we have a disparity between primary supply and primary consumption. So we see the introduction of funds like Yellowcake LLC, pulling material from the market, and we have producers now, because producers have reduced their primary production significantly in the last several years. 20%, more than 30 million pounds of primary production has come out of the market. So the question really is, how long can the inventory, which is the above ground inventory, support a situation where primary production is not meeting primary consumption. These are very similar things to the environment and that led up to the large price spikes and very exciting times of 2005, 6, and 7 in the uranium markets. I see great similarities today. Again, we're on the heels of Fukushima, a period of time where overproduction, post Fukushima, we had overproduction. We added to the surface inventories, but now production curtailments come to the point that production's not meeting demand, and investors are interested in seeing the rebound in uranium price and the support for uranium production companies again.
For the average investor who perhaps is not aware of the previous bull markets in uranium and the potential gains that can reward early investors, do you still feel that there's perhaps a fear element to the sector in general? And what I mean by that is the memories of Fukushima and that disaster are still perhaps at the forefront of the general investor's mind. And if so, if that is the case, what do you think will change this going forward?
Yeah, Fukushima, did have a very significant impact on investors who were in the uranium story at the time. We saw dramatic share price declines in the investable uranium producing universe, and it left a scar on the minds of uranium investors. We always have that possibility of another black swan event. I think today reactors are operating much safer, and we've learned lessons from Fukushima. We've certainly knew a lot more, following Chernobyl and 3 Mile Island. Those are events of the past that have left investors wondering, will it happen again? And I can't answer that, but I understand that idea. Today, the opportunities for investing, are really good. The memories of Fukushima should be really now in the investor's mind is that it created an excess of production for a period of time longer than expected, and it created a bear market for uranium that's endured. But today, the fundamentals are present for prices to go up in uranium. There's pent-up demand. There's uncertainty due to the Section 232 investigation here in the United States. And the real question is, how long can this go on? The opportunities for investment are very good today, in my view.
Excellent. Okay, as we begin to wrap up the show today, Wayne, is there anything else you wish to talk about today? Anything else on your mind?
Well, really, the uranium production industry and, the industry that I've been involved in most of my career, which is the U.S. production industry, is going to need new investment into its infrastructure to bring it back to the levels of the past. Back in 1988, when I first came into the industry, the United States was producing 15 million pounds per year. Today, our industry is on its heels. We're producing less than 2% of the domestic requirements. We're producing around 1 million pounds per year in the United States. And we need capital to return these idled facilities back into production. We need capital to develop new production capacity here in the United States and to identify future mining targets for the industry. Investors should be looking at producers, developers, and explorers and the opportunities. But in my mind, the best opportunities today are with the existing producers. The existing producers, those who are still in the market producing really truly strong companies to have survived this prolonged bear market. It may not look like it on paper, but those companies that are still here producing today have endured a very difficult time, and they have very bright times ahead. They have the lowest capital needs, the shortest time frames to put production back online, and because you're looking at existing producers, you have a significantly reduced regulatory and technical risk when you consider those investments. Peninsula Energy, the company I'm with today, is one of the small handful of current producers in the United States. That's an investable company. We're listed on the Australian Stock Exchange, and we've had a nice little run as of late with some of the internal catalysts that we've been anticipating coming to fruition. But with the external market drivers and the ongoing internal catalysts, we view the next couple of months, from now to the end of 2019, to be a very exciting time for Peninsula Energy, and this is a great time to take a look at existing producers in the market and see how the stock will run on the heels of Section 232 investigation going on in the United States.
Okay, well, thank you very much for your time today, Wayne. Much appreciated.
You're welcome, Karen. Thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?